Viewers, the government has proposed to issue a digital rupee or central bank digital currency in the fiscal year 2022-23. Additionally, the budget also proposed imposing a tax of 30% on virtual assets, effectively legitimizing the trading of private cryptocurrencies and non-fungible tokens. The announcement has left many more confused about the government's outlook towards cryptos in general. Is the move broadly in line with the centre's plans to have a fiat digital currency while disallowing the use of virtual coins as legal tender? Or has the move brought more clarity for crypto stakeholders? Or then has the FM's subsequent clarification that the decision to tax doesn't mean private cryptocurrencies will be legitimized only added to the confusion? Why is the tax on crypto assets the highest in their class? Would it have been better to have adopted a bill first, tax later policy? Let's open this conversation up, viewers. I don't need to go over all the details for you today because they've been announced. You already know. You're beginning to also assess the impact. And there are a series of graphics that we have made that puts this entire conversation into context. I want to begin with Mr. Jayant Sinha, Member of Parliament and Chairperson for the Standing Committee of Finance. Mr. Sinha, first of all, where is the government coming from? Many people are saying, and let me put it on record, that I am wondering if the government here is hedging its bets.
No, so Rahul, we have to understand that there is a spectrum of how you deal with these new crypto tokens, these new crypto assets, right? On the one hand, you could say that they are banned outright and they're illegal. That, of course, has been clarified by the Supreme Court that they are in fact legal. Now, after that, there has to be a taxation framework that has to be prepared, and that is what the budget has brought in, a taxation framework where there is going to be a charge on whatever income you generate at 30%, plus there's a TDS, and all these exchanges have to be recorded, all these transactions have to be recorded, and that's the taxation side. Then there's a third step, which is around the regulation of these crypto tokens as well. And then there is a fourth step, which is the cryptocurrency, if you will, which is, of course, something that's done by fiat by the sovereign. So there are four steps here. Of these, as you will see, through taxation and the announcement of the sovereign digital currency that is going to be promulgated, and that's going to be done by the RBI, two steps have been taken. Supreme Court had already taken the previous step about its legality and illegality. Now, the final part, which, as the Honorable Finance Minister has explained very clearly in this process, that there is still consultation going on in terms of how they need to be regulated domestically. There is work going on internationally at the G7, the G20 level, and at the Bank for International Settlement as to how this has to be dealt with internationally. And so while the consultations are happening domestically and a global consensus is emerging, it's better as far as the regulation step is concerned to see that all of these processes come to their logical conclusion, and then the regulatory framework to be put together. So as I said, number one, legal, illegal, that was decided by the Supreme Court. Number two, taxation, that has been taken care of. Number three, RBI's clarity as far as the sovereign digital currency is concerned, that's been clarified. What is awaited now, as I said, driven in part by the domestic consultations and the global consensus building that's happening, is the regulatory framework for these crypto tokens.
Mr. Sinha, the remarks that I was privy to, and I think most of India was privy to because of the minister's press conference. She said that taxation doesn't immediately indicate that we are legalizing private cryptos. Even though you said that the Supreme Court, and that is a fact, that the Supreme Court has come out and said that, look, there can be no compelling reasons to block the private trade. So I don't understand this. If that is the case, then why not just say, look, we're going to legalize it. We're just taking some time out to decide the framework.
Well, there, Rahul, you have to recognize that, as I said, the regulatory framework will have to be allowed. And again, there are many different use cases, right? So when the regulatory framework comes out, certain use cases may be allowed, certain use cases may not be allowed. So it's not a black or white answer here. There are shades of gray in terms of the different use cases. And these crypto tokens, because I don't even want to call them assets, because assets is one use case. Currency, which is a sovereign currency, is another use case. There are other use cases that are related to the way software is managed. There are use cases that are linked to non-fungible tokens. So there are multiple different use cases. When the regulatory framework is established, it'll become clear which of these use cases are going to be allowed, which of them are going to be restricted, and if they're restricted or banned, how will that be done? I think that full spectrum of use cases has to be understood. Again, as I said, domestic consultations have to be undertaken, and a global consensus has to be put together so that we understand which use cases are acceptable and which use cases are not acceptable. And I said, that's the shades of gray. There's one more important point, Rahul, that I would like to explain to you and to all your users. There are many jurisdictions which have established a regulatory framework already for these crypto tokens. So Singapore has done it, Japan has done it, and so a framework is in place. Now, what is different between those jurisdictions, those countries, and India is that in India, we have capital controls. And by the very decentralized distributed ledger technology that's associated with these crypto tokens, it's possible actually to be able to, in some ways, evade the capital controls and the FEMA regime that we have. These are some of the use cases that will have to be considered and thought about very carefully to understand whether they should be allowed or not allowed, and if they should be allowed, how they should be allowed. That's all part of the regulatory framework that has to be worked out in detail, and all of the intended and unintended consequences have to be thought through. And that's the process that we are in right now.
Okay, Naimish Sanghvi, former of CoinCrunch India, how do you view the budgets, announcements, the subsequent clarifications?
Honestly, Rahul, I feel like the taxation part is not really that big a problem, because at the end of the day, if you are making money, it's fair for the government to ask its cut, right? In fact, it has become more clear as to how we are supposed to treat them in our books. The problem that I see is this one tax deduction at source, TDS, which takes away 1% of the capital of the seller and parks it into the government's accounts, which means that a trader who is running its business, like he's a daily trader or who's arbitrage trader, who does frequent trades, they will run out of capital very soon. That's the one concern. And the other concern that I feel is that mitigation, there is no clarity, or rather less clarity on how you offset your losses when they happen in the trading of virtual digital assets itself. Can you offset them with the profits in the trading, or can you not offset them at all? So that ambiguity is sort of right now bigger debate within the community as well. Those are my two concerns. We shouldn't have, I believe that the government should have taxed it. Fair enough. We were already paying taxes. Now there is more clarity. But the disallowance of, offsetting expenditure and losses is somewhat a really big concern.
Let me bring in also Sathvik Vishwanath, CEO, co-founder, Unocoin. Sathvik Vishwanath, should the government perhaps have come out with a bill first and then talked about taxation and other issues?
So see, what we're talking about here is the budget speech. The budget is all about how will the government make money and how will the government spend money, right? So they don't obviously talk about the regulations here. And however, till now, people have always used to pay the taxes, whoever are earning the more money than the prescribed limits. Just that this has come as a clarification, I would say, or maybe just a little bit on the upper side itself is what I continue to believe. So they just want to make sure that, okay, if you're doing this crypto, even if the crypto transactions or whatever exits you're trying to do, or trades, all the profits should be taxed. So this pretty much, it ends there, right? So it is definitely not talking about the legality. And this, whatever clarification we got is about the number. People used to pay maybe 20% as long-term gains. and 30% of short-term gains. Now everything is like fixed at 30. So this is how I see it. This obviously is not related to any kind of regulations yet.
Okay. But would you have wanted, as I said, a tax to come later and the bill to come first?
That would have definitely made more sense, I think. So now it's the view of the people that given, let's say, 30% tax, which is more of the taxes like for lottery tickets or gambling and betting kind of thing. Because this is not just 30, it is 30% flat. And if you see how many people are kind of paying taxes, it was like 8 to 10%. And how many people are falling into this 30% flat? It could be about 2% of the population. But now, because of this new rule, every person who is even making a single rupee through crypto trading is kind of liable to pay taxes. It is kind of penalizing the remaining 98% of the people. So if the regulations have come up first, I think this would have been this strict and this high. People would have understood it better, what is good, what is bad. So now it is like saying, okay, anyway, people are making money, they're taking the bigger bets. Whoever are making profits, let them pay, right? So this is different than having the regulation saying that, okay, this is allowed, this is not allowed, this is good, this is not good. So for this, we have to pay taxes. Then it would have been more in terms of people should pay taxes in their slabs. But it's as simple as that. I mean, this definitely did not need a separate category of its own.
Okay, Subhash Chandra Garg, former finance secretary. Where do you come in on this?
Rahul, the capital gains and the benefits made on the trading of crypto assets in whatever forms, NFTs, currency, or whatever, was subject to tax earlier also. This was a legitimate business, as you have noted. But there was no clarity for both the investors, traders, and also for the tax authorities. At what rate do you tax them? What do you apply this about the losses, the cost of acquisition, and other things? These were the aspects which are not clear. So by bringing this into this bill this time, the finance bill, I think government has clarified very well that these are taxable at this rate, what is allowable as deduction, what is not allowable as deduction. So I think this is a very good move in terms of bringing the clarity. But in terms of its whether it's too high, and more particularly this TDS business, I think is going to create a lot of problems for the investors. 30% flat tax is a very high rate compared to any other asset class. Second, this 1% TDS to be deducted only from the sellers who are resident Indians. But if you buy from the non-residents, you're not supposed to deduct. And then who will deduct? Where will it be deposited? Creating problems in making every investor or trader a kind of an entity which will need to deal with the tax authorities to do it. That is going to create problem. And there's one more aspect which is not very clear. It has not been talked about so far. While the asset-based profits are understandable, but a lot of use today on the blockchain crypto technologies take place as a kind of service or a business. You make a lot of applications on blockchain platforms. You also do lending, etc., like decentralized finance, etc. They are not asset sale or purchase. There you pay for the service which you are availing, right? So how do you tax these aspects? And the crypto platforms or the blockchain platforms which provide these services and earn profit out of these businesses is not also very clear. So I think let's take it as an opening gambit that the government has spoken for the first time in a very clear way. But there are lots of issues which will need to be sorted out. So I think the industry can now engage with the government on all these aspects, and over a period of time, we can build a more stable and clearer regime on all aspects of it.
Let me bring in Sumit Gupta, who's the co-founder and CEO of CoinDCX, as also co-chair of Blockchain and Crypto Assets Council, BACC. Now, Mr. Gupta, countries around the globe like the UK, the United States, Canada have identified crypto as a capital asset, levying a capital gains tax or the traditional income tax, depending upon specific transactions. In that light, how do you see the taxation slab on crypto announced in India?
Sure. So Rahul, my take is as everyone mentioned, right? Overall, taxing crypto is a good step. However, treating it akin to gambling or betting is something which is quite discouraging for the industry and the community as a whole, right? I feel that crypto assets should be treated fairly and at par with other asset classes. For example, the 30% tax rate flat, that's not very healthy, offsetting not allowed, carry forward not allowed, is just going to increase more burden on the retail investors. That 1% TDS point, right? That's going to suck the liquidity out from the market, disincentivize traders and market makers, and that's ultimately going to affect the end customers. The intent is to lay out provisions which are in benefit for the end customer. So right now, these are not aligned in that direction, I would say. Overall, the overall provisions that we have laid out is going to have a lot of disadvantages for the country. For example, with such stringent provisions, many people or innovators who have invested in it from years back, and when other countries are essentially having frameworks where they want to be pro-crypto and, not laying out any taxes or basically having a favorable crypto regime. And in India, where you have 30% tax, I think that might lead to a lot of brain drain. It's already happening. A lot of my friends I've spoken to in the last 2 days are already thinking of shifting the base outside the country, which I believe is going to, is not good for the country in the long term, right? We need to prevent that from happening. Plus, as Mr. Garg also pointed out, there are a lot of international exchanges. If you have such stringent provisions, it is going to give more impetus and motivation for people to trade in other exchanges which are not in the control of the nation, right? So I think the tax guidelines should be laid out in a way where it continues to favor the innovation that's happening in the industry and does not disincentivize the retail investors who are in millions. Now, if anyone, even if they have earnings of 100 rupees, 1,000 rupees, if they have to compulsorily file for taxes, that's just going to create unnecessary load on the excesses as well as the government.
Mr. Sinha, there is a feeling, and it was expressed, that perhaps this is some sort of a move to disincentivize trading in private cryptos as a whole. Where did this 30% number come from? And how is it that we've got tied down on the more on the nuances, as explained by Subhash Chandra Garg and, of course, Mr. Gupta, who now thinks that there might even be a flight of capital, really?
Well, this is an evolutionary process. And I think, as I said, as far as taxation is concerned, clarity has been introduced. And as far as the regulations are concerned, those will evolve. Those will be specific to certain use cases. And over time, we might well see that there may be differentiated taxation for different use cases as well. But that depends on how the regulatory framework is established. But again, I will just repeat once again that this is a continuous process. As Mr. Garg correctly pointed out, it's very important for industry and all stakeholders, concerned stakeholders, to engage with the government, that's the Ministry of Finance, with Parliament, that's our standing committee, and to continue to show to us, what are the benefits? Because so far what we always get to hear is assertions, that this is good, this is innovative, this is excellent. Well, what we want to see is specific details on different use cases and why this is in the national interest, why this helps the general public. And when I say the general public, I don't mean a small handful of traders or a small handful of very wealthy people that are doing this from a speculative trading perspective, but I mean the general public, the common interest, the public interest. We need to see these specific use cases that show us that by using these underlying technologies, we can make a big difference in India's competitiveness, in India's economic growth, and in job creation. So we need to see those very specific detailed use cases, and we need to understand what are the kinds of regulations and tax policies that are going to benefit these very positive use cases. So that's the kind of engagement that's required.
What is a positive use case? And that's now a fundamental question. And I want to open this up also and bring in Varun Seth, founder, blockchain lawyer, .in. Mr. Seth, the finance secretary recently said that Bitcoin, Ethereum or NFT will never be legal tenders. Now, what happens then to investors who have been investing in Bitcoin or Ethereum for the last few years? Now, I want to point out some examples because 2021 was the year of NFTs with Indian celebrities also from Bollywood and sports rushing to launch digital memorabilia through NFTs. For instance, Amitabh Bachchan's NFT auction, which included his father's poem Madhushala recording in Bachchan's voice and some other unique items, reportedly received, $900,066. Now, if NFTs can never be legal tenders or legal assets, what happens to the NFT market and to those that have invested in the same? And hence, I was asking, maybe we should have had the bill first and then perhaps moved into this zone of taxing, etc., etc.
See, first of all, no member from the crypto industry was actually wanting or they were claiming that all these different assets, Bitcoins and Ethereums and Solanas and NFTs should be construed as legal tender. That is not what the crypto industry wanted. Primarily what they wanted was, first of all, a recognition. Till one day even before the budget, we were still in this industry that, is there a 10-year jail term coming up? Is it that we are in a legitimized industry or not? So those skepticisms were always there. And even after the Honorable Supreme Court's judgment on March 4, 2020, we still see that when you go to a bank, you run a crypto entity, you still face struggles in opening a bank account, despite the Honorable Supreme Court's judgment. Now, what has happened now with this is that this is a big step towards developing regulatory framework. However, I'm of this view that we could have borrowed from the Singaporean example, wherein they were very clear that this is an innovative technology and we want to bring in the framework first. They very clearly mentioned that there's a standard 7% GST rate in Singapore, which we will not apply on cryptos. Because this is a new asset class, we are still experimenting it, we are still understanding it, and thereby not to kill innovation, there is very clearly no GST on it. I also want to draw the example of Australia. There's a recent standing committee report which is submitted to the Australian Parliament, which stated that mining of cryptos using renewable energies should be exempted from capital gains tax. That is how you attract innovation, to ensure that at global level you become competitive. Now, currently what has happened here in India is that, of course, it can be debated 30%, could have been 20, could have been 25. Those things are there. 1% TDS could have been maybe deferred to a certain time when the industry got a bit mature. Now, what has happened here is that an 18-year-old who's never paid taxes, who's not even liable to pay tax, is now under a burden. Just like when you have property sales happening above 50 lakh rupees, you got to deduct 1% TDS. That 18-year-old chap has to ensure compliance for TDS on these crypto trades. In addition to that, it's also not very clear, like US Fed, IRS, there's a notification which mentions three things very clearly. Point number one, it says that in case you are doing any mining activity and you make gains out of it. Second, in case you sell off cryptos against fiat currency. And third, crypto to crypto trading. All these three activities are construed to be transfers and thereby taxable. The third point, where crypto to crypto trading was actually sort of not looked upon properly, and there was lots of debates around it. So the IRS, in the tax return filing forms at the end of the year, it removed the field which was initially inserted to disclose the crypto to crypto gains. So that became optional. Now, in India, what has happened is that we want to ensure the taxation regime first without having the entire regulatory framework in place. I still feel that the regulatory framework should have preceded the taxation regime that was implemented in the budget.
Those are important points. And that's the reason, Subhash Chandra Garg, I was asking whether perhaps we could have come out with some sort of a bill first and then talked about tax, other issues. Because from the other stakeholders, there seems to be confusion and lack of clarity. Subhash Chandra Garg, though you have come out and said, look, attempt to regulate cryptocurrency is a good move, but have you actually not stressed so much on the regulatory aspect as much as we have stressed on the taxation aspect?
See, I think this is quite a misconceived argument. There are hundreds of commodities and assets which are used and traded. The government doesn't regulate them all. Only few things are regulated. So crypto businesses and crypto assets being first sort of recognized and being regulated and then you tax them, I think this is quite a flawed. You can't put the cart before the horse. The fact that the trading is taking place, the fact that profits are being made, this is all the facts. How can this be allowed to go untaxed and untaken note of? So, in my judgment, these two are completely separate issues. You may choose not to regulate the cryptos at all.
No, fair enough. But Mr. Garg, what's the logic behind taxing them at 30%? None of the other asset classes, equities, etc., are taxed at that. So what is, I'm not getting that. Where is this number come from?
That is exactly the problem. You came for a number. You see, in India, there are still certain asset classes or certain businesses which are taxed even at 30% or higher. For example, unlisted businesses are subjected to a higher corporate tax. 30% has been the usual maximum tax rates for the individuals before, or even today, for the individuals, the maximum tax rate is 30% if you don't count the cesses and surcharges. So you are taking 30% as a common, normal, maximum tax rates, right? There are lower tax rates, there are higher tax rates also,
okay,
but commonly 30%. So I don't think...
Is it legally arguable? Is it tenable? Because obviously there will be some people who will say that one set of asset classes now is getting punished more than another set of asset classes. What if someone goes to court? And there is already, of course, huge talk about lowering this or questioning the move at 30%.
See, I think that's a logical debate, whether it should be sort of almost taxed at 30% plus some cess. I buy the point that Sumit Gupta mentioned here, that at 30% it kills innovation. I give you the example of Singapore. They clearly mentioned that there is no GST. They also categorize that, let's say, raising of crypto capital, what we call as ICOs or IDOs, raising of crypto capitals, that is a capital account transaction which should not be taxed at all. It's not taxed anywhere. You run a startup, you raise capital, there's no tax on that, right? Here, there is no categorization of a capital account and a current account transaction, which means that in case you're doing an IDO, does it mean that a person raising IDO will be receiving USDTs against issuance of own tokens, and all the investors have to deduct 1% each? Then it makes the entire effort of raising funds even more cumbersome and complex. And it also then, as Sumit rightly pointed out, it also sort of kills innovation in this sense that there are many other. Dubai has come up with digital token offering guidelines. They are setting up a DMCC center in the offshores there, and there is no taxation there. Of course, recently UAE also came up with 0 to 9% taxation, but it's way less than the current taxations that we are having here for the cryptos. So it can be debated. I still feel that it's a good thing it's a big step to first of all tax it, but we are also expecting that gradually this 30% should eventually come down, because at 30% you cannot expect innovation to happen at 30%. It should be some incentivization.
This is the point. The government's attitude seems to be that, look, we are dealing with a set of asset class that sort of falls in the ambit of lotteries, gambling, gaming activities. This is some, sort of unregulated, the Wild West of trading. When we all know that crypto requires very specific skills and cannot be compared to gambling. So 30%, do you think this was just too much and it needs to be rationalized? And do you believe that the government is thinking on those terms at all?
Rahul, the budget comes first with respect to the regulation and the taxation, right? So the budget has come before the regulation is in place. And as I said, the regulation is not yet in place right now because it's a very complicated subject. We need domestic consultations. We need the global consensus to emerge. All those elements have to be in place before the full regulatory framework can come in place. But the budget, obviously, where we bring in the taxation proposals comes first. And therefore, this is why the taxation regime has been put in place. Now, what the tax proposals or the tax framework that have been established in the budget suggest is that one use case, which is where we are looking at these cryptos as an asset class, is going to be regulated or taxed in this particular way, right? But there are many other use cases as well. And those, again, as I keep saying, the industry has to be clear about what the other use cases are. And then for those use cases, what is the appropriate regulation? What's the appropriate tax framework relative to other benchmarks that may be considered? What we've done right now in the budget is to say that if you're going to use crypto as an asset class, then it is going to be taxed at 30%, and there's going to be a 1% TDS. You're going to have to maintain all your transactions. Now, there can be a debate as to whether this is appropriate for innovation, whether it's the right balance between taxation and innovation or not. And there can be a debate, which is exactly what we are having right now. But I think...
Which side of the debate are you on? Because, you're seen as somebody who's part of the forward-looking, point of view in government. You're pro-innovation, and you've talked about the importance of that. So which direction do you go on this? Just your personal view.
So my personal view is, and unfortunately, I will say I'm confused right now, okay? And I'm confused because what I have seen is two very clear use cases, okay? Let me just explain those. One use case is a trading speculation use case where you're investing in crypto tokens like you would invest in gold, or you would invest in land, or you would invest in another asset class. And if in that use case, my own personal view is, then depending on other asset classes, make it on a level playing field. So if you're investing in gold or you're investing in crypto assets, then there's no difference. You can choose one or the other. That would be my personal view, that put it on a level playing field along with other assets. Then there's another use case, which I think is actually quite a positive use case, and that is the NFT use case. In the NFT use case, what you're doing is you're securing all kinds of assets, whether they are digital virtual assets or physical assets. You're securing them against a token which is authenticated and it is unique, right? And so that gives you a tremendous amount, like the example you gave of Shri Amitabh Bachchan's Madhushala as something that is secured against a crypto token, right? Now that's a pretty positive use case. Now in that positive use case, what is an appropriate tax and regulatory framework? I think that still has to be worked out. Now, I've given you examples of two use cases. One, where crypto is being used as an asset to speculate in or to store value in, and the other where you're using it to authenticate certain unique sort of properties, right? But there may well be other ones, like, for example, securing land records, securing transactions of different kinds. Now, for those cases, what should be the regulation? What should be the taxation? I think that's still a continuous process that has to be worked out. There, I don't have an answer, Rahul. I don't really know what is the right way to do it. As Mr. Garg pointed out, maybe an NFT has to be viewed as a service, not as an asset. In which case, if it is viewed as a service, then it should be taxed under GST as 18% service taxes. So that's why I'm saying we have to be, rather than making sweeping statements, we have to be very granular and specific to understand what is the use case, what is the right benchmark to do, and then apply it that way. As of now, my own sense of what has happened, I'm speaking, as an individual here, not a standing committee chair or whatever, is that right now we have taken one use case, which is a digital asset use case, and we have applied a 30% tax rate. I hope that makes sense.
Yeah, I mean, it does make sense, though, as I'm saying, I suppose we have to wait now for the government to come out with a more comprehensive announcement on this, because obviously the logic is sort of understandable, but it doesn't obviously translate because there are so many problems with the taxation policy as of now. I mean,
and Rahul, I want to draw your attention very quickly to another technology area that took many iterations to get to the point where it is today, which is drones. Now, when I was the Minister of State for Aviation, I handled the drone situation very, very extensively. And we had to do a lot of work in terms of consultations, understanding with stakeholders, dealing with the national security concerns, dealing with the law and order issues to come up with a regulatory framework for drones. Eventually, we were able to do it, but it was a very complicated subject that has taken a lot of time. But once we've established in the regulations and the proper framework for dealing with drones, now you can see, and in this budget as well, the Honorable Prime Minister, the Honorable Finance Minister now feel like we have a foundation to accelerate on and to build on. And that's what's happening to drones. So for all of my friends in the crypto industry, I would say it takes time to sort through all of this. Ultimately, we do get to the right answer like we've done with drones. and then the industry can really take off, but then it takes off on a strong foundation.
Okay. Let's hope that the fears that were expressed by Sumit Gupta earlier don't actually take off before we come to that point. Nonetheless, we leave it at this. We're coming right back, viewers. Stay with us. Don't go away.